and then let me project. Okay, so I decided that today I'll do a video on this so that I'll upload on my YouTube. All right, so you guys have witnessed me using MIS and using the term MIS, okay, in trading, and I've been using EBEs and I've been talking about it. And I realized that most people don't watch the videos to the end. So when I uploaded a video on EBE, people didn't even know that there was something in that video. That is a part 3 of my series on YouTube, that there was EBE there until I had to I spoke about it. Okay, so with this one too, we are going to hide information at the end anyway. So the thing is that before you understand MIS, you should understand basic SNR. That is the classic and the kissing candle or the open close, which I think most of you already know. So I'll just brush it off. Okay, so the V and A shape. Okay, so those are the resistance and the open close. So we know that when two consecutive buy candles are aligned, the midpoint is what support. When it is two sell candle, the midpoint is what resistance. And then the resistance is marked at the close of the candle. So for instance, if there's a gap, okay, if there's a gap like this one, these two candles, you have to mark what? The close. This is open, okay, low, high, close. Don't mark this. So this is the real support. Okay, so it's the same thing that applies to what? The resistance. Okay, all right. So I think you have a resistance, open, close, resistance, resistance, support, support. Okay, so that's it. All right. So now, what is a miss? So this is the today's topic. So it is a situation where price fails to mitigate or touch any of the two support and resistances that we just talked about. Okay, when price fails, it comes close to this support, doesn't touch it. It comes close to this resistance, doesn't touch it. It comes close to this type of support, no. It comes close to, or it comes close to the normal V shape and A shape and doesn't touch it. So that is a definition of what I consider to be a miss. Okay, so a situation where price comes. So here we have a support. You have two buy candle. You have an open close. Price comes close to it. It doesn't touch it. This is a miss. So it has missed what? A support. Okay, this is another example. Price comes, doesn't touch the classic SNR, that the A shape. It doesn't touch it. This is a miss. So it's not like Miss Ghana or Miss Cote d'Ivoire or Miss Nigeria, or a miss, a woman who is not married, and then when she becomes married, she's called Mrs. No, not that one. So it is price missing a level. Okay, so let's look at this particular example and then we go to the chart. This here, this is gold. We have price buying, and then boom, we have a sell. The next candle, you see this next candle, black candle, fails to go to touch this, and this is a miss. Okay, it fails to touch it. See the next candle, this candle failed to touch it. So this is what we call the miss. This second stock candle is the miss. Okay, so this is another situation. We have a breakout, okay, and then we have a resistance. Open close here. Price comes close to it, fails what? To touch the level, the resistance. Okay, so this becomes what? A miss. This becomes a miss. Okay, so now this one will strengthen this one for a sell. Okay, so because of this miss, this level becomes what? A high probability level. That's all about a miss. Because there's a miss somewhere, price will become what? The level will become a high probability level. Okay, now, okay, that's okay. So now this is the last example. Now this example, I'm going to show you how it works. So for instance, this is the first step. Look at number one. Number one talks about this support. Number one is talking about this support. Now look at how it looks like. This is it. Let me get a pen. Okay, look here. Price failed to touch it. So here, Price failed to touch it, so it becomes liquidity. Dollar sign. Those trading smart money, this would be a dollar sign. Now, price comes in, boom, takes the liquidity into the support and flies. You've seen it? Okay. Next. Okay, so this one, next. Clear or how do I clear? Erase. Okay. Okay. So next, we have number two. Sorry, number two. Number two is talking about this support, right? This is a weekly chart. I'm talking about this resistance. Sorry. Oh God, this is a resistance. Now you can see this is clear. That's why I didn't project it, make it big. Price missed the level. We missed the level. Okay, so we missed the level. Then price trace about. So now the problem here is that this, if you are trying to sell from here, all this will be a drawdown. This is a weekly chart, a weekly candle. This should be about 200 pips, okay, or even 300 pips. So how do you go about it? But that tells you that there's going to be a reversal around this zone, okay. Now look at number three. Look at number three. Number three, we are talking about this support. You see, price comes close, never touch it. It becomes what? A miss. Look at how price use this one to buy. Okay. All right. So it failed to touch this particular resistance. Okay. Now look at how price, because of this miss that is here, look at how price bounced back here. Now, this miss, this one that was used. Okay, let me clear. Okay. So this one, this level that was used, okay, also became a miss for this support. Can you see? It missed this support. It missed the support. So price used it, rejected, came back, and boom, went here, and it has come down like this. Okay, so that is the power of the miss. That's the power of the miss. So for instance, this miss, this trade, okay, it's against the trend because you have a rejection here, you have an engulfing. So there's a sign that price is coming down. All right, but you can buy here. You can buy here and target the next roadblock. Okay, you already know about roadblock. So here, again, you have a miss and you can use this one to buy, and then we go. So clear. Okay, then close. Okay, so we are done. Oh, okay. So we are done with this. We are done with this. We are done with this. Let's go to the charts. Let me show you some examples. Let me see if I remember some examples. Okay. So the examples will be normal examples. You understand. Let me use gold. Okay, so gold, I will allow you to ask questions, sir. Okay, so on gold, I'll go to gold on the monthly chart. Monthly chart, gold, monthly, gold, monthly. Now I'm looking at this level on the weekly. Okay, this level on the weekly. Look at it. Mhm. Okay, so I'm going to open it so that you can see what. All right, so I'm drawing the resistance that is here. Can you see the miss, right? Price missed the level. What did he use? He used it to sell. Can you see? It sold. Okay, so watch it. Well, it sold powerfully, right? It sold powerfully. Very strong sell to the downside. Okay, you see, because of what they miss. I don't know how you're going to use this information, but I've already explained how to use it. the miss strengthens the resistance. So because of the miss, price just dropped. Okay, price just dropped. Okay, today, 4-hour chart. Watch closely on the 4-hour chart. Okay, 4-hour chart. If you had seen this, you will see that today you would have done magic with it. 4-hour chart. Can you see the miss? Can you see? Can you see? Price came close to it, and then boom, missed. So today, price. Okay, so let me see how many minutes we've already done, so that I'll bring the meeting to a close and then release one, boom, one powerful this thing. So for instance, price came close, missed. Okay, but before then, we were selling, we were all selling. Ah, yeah, where is it? Stay on the page. Okay, so we were all selling. Why were we selling? We're selling because of the QM. Okay, we're selling because of the QM. This is the QM. Very beautiful one, right? This is it. High, low, higher high, lower low. So we were selling. This is it. So price came in, drop, we got a breakout. Okay, I think we got a this kind of breakout, but on the 15 minutes, we are rejecting 1-hour level. 15 minutes, reject 1-hour level, breaks out, and we start selling. Today we tested, we sold. Okay. I had my limit orders somewhere here. Okay, somewhere here. If I talk about this thing, don't come and ask me any question because I'm not supposed to release it. Okay, so you see, 4 hour, you have the 4-hour resistance. Okay, you have the 4-hour resistance. You have the 4-hour resistance that has missed. Okay, but I didn't take the trade because of the 4-hour resistance. It's one reason. Okay, when you go to 1 hour, okay, when you go to 1 hour, right, there's consecutive sell candles. Okay, this is smart money, some consecutive sell candles, and they call it the consequent encroachment. Okay, some people use 50% of the wick. Okay, but that's not what I'm coming to talk about. Do I have Fibonacci? They use 50% of the wick. Draw. What's the settings? Templates. Okay, so you see 50%. Even 50% missed. Okay, I didn't miss. Okay. All right. So they call it consequent encroachment. That is not what I did. Okay. So it's also consequent encroachment when you're using 50% of the week. But no, I do this. Otherwise, you'll be looking for every 50% of every week. Okay. For instance, you look for this week. This week, 50%. Price went beyond 50%. It went beyond 50%. You see, it went above it. So it's not 50% of every week. So what I do is this. When you have a void, when you have a series of sell candles, big sell candle, okay, or one big sell candle, like this, okay, or series of just sell candle, what you'll be doing is that you'll be going low, moving from one lower time frame to one lower time frame until you see the last FVG, which is the last imbalance. So you see here, this is the last imbalance. The last imbalance is from here, okay, and here. This is the last imbalance. This is not what you're looking for, okay. This is too big for you to select a trade. So you go to the next time frame, and then you see that the last imbalance, you see only black candles, okay. The last imbalance is here. Okay, so it is this week and that week, this week and that week. So I'm taking the resistance, I'm moving that resistance to this week. Okay, and the other week. and then the other week. Okay, this particular one. Right, so that's my zone. Phew. Ha ha ha. You see, so that's the reason why. That's the reason why. Come on, come on, come on, come on, come on. Where is it? That's the reason why so many sell orders were here. But you know the funny thing? When I wanted to take a screenshot of this, I took a screenshot of this. I wanted to share that I got out of the trade too early. See, I sold here at the top sell. I sold here. I sold here. Price came. I sold here. Because price wasn't moving the way I want, I was just closing the trades. Okay, but this is a lot of money because it depends on the. So I wanted to write on the page that, oh, I left the trade early. So when I took the screenshot, I saw this and I said, no, if I leave this in there and people set their limit orders there too, and price comes and goes above it, they'll lose money and then it will be my fault. So I decided to delete it. So when I deleted it, when I, I deleted it, then I didn't even set the limit orders again. And then I got this entry to the downside, which I'm going to explain. Okay, that's there was higher time frame support. Price comes in on the 1 minute, reject, breaks out on the 1 minute, comes back to retest here. So I entered somewhere around this level. Somewhere around my first entry was around this level. Okay, and my stop loss was right below this level. Okay, so when I didn't know there was going to be news. I don't know where the news came from. So when this one came in, it triggered my stop loss. So when it was going, I just entered plenty, and then I decided not to put back my entries here again. But I knew that price would go here and then it will fall. All right. Now it is not just because I didn't know just because I had to know. No, but there were a lot of things. So my intent is this. For instance, you have to respect everything that you have learned that works. That's all. Everything that you have learned that you think works, bring it into your trading strategy and don't look down on anything. So that's what I did. So that's the reason why that's the reason why price came here. Okay. Now they have built all these misses around the level, and there were a lot of things. We have a 4-hour miss. Okay. We have a consequence encroachment. We have everything here. We have a lot that I will not be able to mention. I'll mention it in my mentorship. Okay. That I will not be able to mention here. All these factors were here that price came and hit in and then dropped. Okay. So what else? What else? What else? What else? What else? The buy. Okay. So what was the buy? Buy, buy, buy. Okay. What here? Okay. Okay. What do you see? Sorry, let me enlarge it. Last fair value gap in avoid. Okay. Boom. Missed. Now watch. Think. Wait. Let me go back. Okay. The last fair value gap in the void will be at the top. Sorry. To be at the top. But the thing is that you saw this box and mark this engulfing. So I was looking for price to react in this area. Okay. Now in this area on 30 minutes, there was a blind spot, which is one of Bystra setup. Okay. Blind spot. Okay. Blind spot is here. Okay. So blind spot resistance or support will be okay. This A and this V. Okay. All right. Okay. All right. So you see, and then 15 minutes last fire galley gap in the void will be here, here, and here. Okay. So when price got to that level, when it hits the blind spot, okay, when it hit the blind spot, we call it the blind spot, okay. When it hit the blind spot, 1 minute gave us a QM. So 1 minute gave us a QM. So you have a low, a high, a lower low, and a higher high. Okay, lower low and a higher high here. And just not, it's not just that. It's not because of the Quasimodo. It's not because of this pattern, right? Just be this pattern. No, not just because of that. It is because price has, you see, the head of this Quasimodo, where it's coming from is the problem. Okay. So therefore, I took I took an early buy here. I think from this candle, buy here, okay, and put my stop loss below this level, below this one, around this level. But the spike came in and then took my stop loss. So whilst I was doing this, I started entering. And then I exited one around this level, and I exited the last one here. All right. So that is it. Now I'm open for questions. You can ask me any question. If it is beyond what I can say, I will not answer. All right. Any question, you can unmute yourself.
Yeah, good evening.
Good evening.
Thanks for doing this class with us. I really do appreciate.
Thank you. You're welcome, bro.
Yeah. I want to know if there is any sort of confirmation when you've checked for like your 1 week and it has touched your resistance or support.
Mm-hmm.
How do you know it actually hold for it to turn around at your reversal? What are we going to look at the smaller time frame?
Ah, okay. So for now, the only thing I can talk about is that this is it. I think I've already spoken about this. You have a resistance, right? Let's say this is a higher time frame resistance. Okay.
Mm,
Higher time frame
mm.
resistance. The normal rule is saying that the rule of SNR is saying that if it is a daily resistance, okay, you have to wait for the daily candle to close, right? Touch and close and reject. Okay. So this one has to reject. Now, why you have to wait for this candle to close is that at a point, maybe during New York, if it touch during New York, okay, it can start coming down like this. Okay, let me draw it big like this. It can start coming down like this, and you'll be thinking, let me make this one line like this. You'll be thinking that, okay, it is rejecting, coming down like this. Oh, it is rejecting. And then by the close of the day, it has broken out like this. You get it? By the close of the day, it has broken out. And if this happens, then you realize that you'll be making losses, right? So you have to wait for price to reject, and then for the lower time frame, which is one time frame lower, okay, to give you a breakout. Once you have this, this is your confirmation that this level has held. Okay, so learning the theory and expanding on the theory, I realized that, okay, instead of me to wait for the whole day to close, okay, there's reaction. And I told you that this daily candle will be doing this. We'll be doing this. Okay. I'll do something called the early bird. So if this is a daily time frame, I will use the 1 hour, two time frame lower, which is 1 hour. So this is a daily level. This is a daily candle. But in this daily candle, 1 hour candle will come first. The 1 hour candle will come, okay, touch the level and reject. Nobody, okay, we can speculate. I tell you, we can speculate that this level can hold, this level will not hold, blah, 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 blah. But nobody knows if it's actually going to hold, okay? So that's the reason why we select the levels. We select the level with confluences, okay? But when prices are approaching, this is what I do. 1 hour has to reject. When 1 hour rejects, 15 minutes has to break out. So I'll have a 15 minutes, something like this. Okay. So once the 15 minutes break out, then I've confirmed that this level is holding for a while. Okay. I've confirmed that this level will be holding for a while. And then when it comes back, I will sell. Okay. So now there are confluences which I will not be able to talk about. How to select your level. Okay. Yes. But this is your confirmation. Your confirmation is a rejection and a breakout. I hope your question has been answered.
Yes, I think to a large extent I understand what you are trying to explain.
Okay. Any other question? Any question? Any question? Any question?
Can you hear me?
Yeah, I can hear you.
Yes. My question is, for example, I'm just new about Malaysian SNR, and
Okay.
there's a lot other stuff that also were learned from your YouTube.
Okay.
You also taught other ways such as Kuasa model and imbalance and ICT. So which one is better to stay with? Because I confuse a lot when I combine all the
Oh,
theories,
no, you don't need
and
to
I
combine.
always don't know which one to take.
You don't need to combine anything. Okay. So what you are seeing in my YouTube, you are seeing my transition. Okay, you are seeing my transition. So at transition, I started trading forex from harmonics, all those things. Okay. Now, brother, there was always something that was lacking. I learned ICT, I learned smart money, but there was always something that was lacking, which is what the buyers. Okay, they'll speculate that this is how you can get your daily buyers, everything. But Malaysian SnR is the key to find what direction. And that is why I'm sticking with it. Now, identify setup. Now, if you have been someone who has traded harmonic before, okay, you like patterns, okay? You like patterns like this. And so if you're somebody who love seeing patterns, okay, you want to see patterns as setup. So for instance, if I take the chart and I have a pattern, most of us trade this pattern, even smart money trade this pattern, and I have this. This is a pattern. This is a pattern that tells me that, okay, price is going to suffer before breaking this high. That's the meaning of this pattern. Why? Because if you are going up, higher highs are broken, lower lows are saved. Once price breaks this lower low or this lower high, sorry, or this higher low, sorry, okay, once price breaks this higher low, it means that it is going to be difficult for price to go back beyond this. Okay, so now within this area, I can look forward more sales. It is a pattern. Okay, another pattern is that this is a strong resistance. Before price broke this strong resistance, there was some form of pause here. Why did they pause? Why did they not break it quick? It is because the strength at which they were moving from here to here is not enough. This is the level where a lot of investment was made. The investment was made to do what? To break this level. So if the smart money or market maker or whoever is moving the market is putting money here to push it, then he will come back. Sorry. He will come back to do what? To close some of the orders and go. Is the meaning. So you are looking at pattern. Okay, if we have a Quasimodo, okay, price came back here, did some movement, couldn't break and went up. What happened? Why didn't they go up straight? Why here? The strength at which you were moving here is not strong enough to push price beyond this. So investment was done where? Here, which is opposite that level. Price will come back in. Oh, I'm twitching too much. Oh, yeah. Okay, like this. Do you understand? So now it is up for me to locate these patterns Okay, I end it here. All right. Thank you very much, guys.
Mr. Christopher.
Hello. Thank you. I think we have I hope you understood what I was trying to explain. Okay. Now, for the last few minutes, okay, let me introduce something that I'm working on. This is my app. It is called AfroPlus.net. Okay. So interestingly, I'm starting a mentorship. Okay. I'm starting a mentorship, but I like to do things for free. I like to do things for free. So I don't want to do mentorship for free, right? It takes a lot of work. Okay. So what I'm doing is this. I've created this app. When you join my mentorship, it is $300. Very cheap, $300. I'm going to teach you all I know. Okay. But your $300 will be deposited in a forest. You will send the $300 to me, right? But you create an account here, and then I'll upload the $300 in. Once your $300 is being traded, so once you're in my mentorship, you will be making 30%, 10%, sorry, of your $300 every month. So you'll be making $30 every month. Now, when you finish my 3-month mentorship, okay, each morning of the mentorship, there will be market breakdown. I'll look at the market, and I'm not the only one. There's another person who is in another Telegram group. He works with me. That's why it's Afro Traders. We are a group of traders. Now, there will be market breakdown every morning, New York session and London session. Somebody will come and do outlook of the market during the mentorship. Then we want everybody to be serious with the mentorship. I'm doing a mentorship that is never, I don't know who is doing this kind of mentorship. Now, when you do that, we want you to be serious. So when you finish, we'll give you a challenge after the 3 months, a challenge to pass. That is our own challenge. When you pass, then out of your money, because your money is being traded, you're getting 10%, 10%, you know that you can make it within 1 week. Okay, so it means that the company will make more money. Out of your money that you paid, you pay a 10K account from HTMO for you to trade. Tell me what you think.
Hello.